All right, well, hey there, everybody. Chris Franks with Texas West Capital. It is, what a day outside. It is a few minutes after 11 a.m. Central Standard Time here on November 1st, 2022. Hopefully you guys are doing all right here. We've got a lot of stuff coming up, right? So as I said, we've got the rain here in the Houston area, or just north of Houston here. Definitely can't complain a whole lot about that. If any of y'all were following me there on Twitter, you might have seen some photos from, where I live over here on the lake, and lake is definitely down a bit. So rain will definitely help out there. Unfortunately, the whole Houston area is prone to a lot of flooding, and that kind of sucks. So it's like a catch-22 there, right? But anyway, moving on to things that actually probably interest you. Let's see here. Today is Tuesday. Tomorrow is Wednesday. FOMC minutes Wednesday, right? So after 12 p.m. I think it's like right around 1 p.m. Eastern Standard Time, maybe 1:30, somewhere right around there, that the FOMC minutes come out. And so again, you got a lot of people chatting back and forth about pause and pivot and this and that. Guys, at the end of the day, the market expects a 75-point rate hike tomorrow. That's what it is, for that to be said, okay? If for some ungodly reason, I can't honestly, I can't think of a reason why it would happen, but if it were to, if the Fed were to introduce a 50 basis point rate hike instead, just be aware there's going to be a lot of volatility in the market, right? So it doesn't matter that they're raising at 70. We sit here and go, oh man, 75 basis points, it's a lot, right? We've been doing it, it's a lot, right? And it is, but it's what does the market expect? And the market expects that. So as long as they do that, there shouldn't be any big disruptions in the market. Now, the second part of that is going to be, what are they saying in terms of the next rate hike? Are they going to continue? Remember, we've talked about the idea that Evans and oh my gosh, the other one, Daly, couldn't think of it there. Have been speaking here more recently, last month or so, month and a half, about the kind of throwing in the word pivot and pause and stuff like that. And again, what I told you, a lot of people are like, oh, non-voting members, doesn't matter, blah blah blah. No, it does. What they're doing is they are front running what the Fed needs to do, right? Why? Because the Fed has been raising 75 basis point rate hikes now through the summer into now. The market continues to expect it, right? So the market's barreling along like this freight engine, right? And you can't stop on a dime, right? If the Fed was not to telegraph something, right? If they were just all of a sudden go and say, oh, well, for instance, if they were to do this time 50 basis point rate hike instead of a 75, right? The market's going to freak out because it's unexpected, right? But it's even more important when you're talking about the Fed slowing down, right? So everybody's concentrating on pivot and pause and all this silliness, and all you really have to understand is the Fed appears to want to slow down. Like not today, not tomorrow likely, but maybe December into January, right? That's what we've already talked about, front loading it into the end of the year, right? And so you can't just all of a sudden come up, let them everybody think 75, and they'll go, hey, surprise, 50. You don't want to do that because the markets are going to be really affected strongly with that, right? So what do? You get Evans, you get Daly to go out there and start talking it up, right? Well, the Fed's going to need to slow down here. Our message is going to be difficult getting it out there when we do this, when we do kind of turn around. And the idea is to get the market thinking and discussing it and starting to talk about it so that it's not such a surprise when it happens, okay? That's really what's going on there, guys. Contrary to what everybody wants you to think and maybe what you think, that's what's going on there. And so that is the purpose for Daly and Evans coming out and saying things they did. Is to kind of just get the market all prepared for this idea that the Fed's going to be, slowing down. Because, again, we're getting toward their rate there now. Now, are rates going to come back down to 2% or something? I don't know. We're at this interesting market. So had you asked me a year and a half ago, you guys know, I was very much on this idea that that we'd have the all-time high, right? And then that would be it, and we'd have this large kind of depression coming in, right? But since then, we had the high, right? Again, we had the November high there for the NASDAQ, and then we had January for, S&P and the Dow and whatever. But those were rollovers. And I was looking for more of a blow-off, just because when my framework, is based on LA wave and cycles and whatnot, and for this to be where it's at, with this grand super cycle kind of top, the idea is that there should be a lot of exuberance, over-exuberance in the markets, fifth waves, as I've told you before. So we should have seen some sort of blow-off. And since we didn't get that, that has me cautious, as we've been pulling back here, as I've been talking to you guys about maybe we've still got a new higher high to go. So if we've got a new higher high to go, maybe we get some sort of double top in interest, right? So we come up here, again, as I told you, yields seem to have topped out and whatnot. CPI seems to potentially be topping out, all this stuff, right? So inflation pulls back. We rally up for a new all-time high in risk assets, right? Legacy and stocks and whatnot. And then you get maybe like a double high kind of thing, and then you have, not double high there, but you get that rally up. And then it comes down, so you get kind of this double high maybe in interest rates. There's a couple different possibilities going on here. But for me, the big thing is we didn't have this kind of over-exuberance at the top. And that's what I was looking for. And that, because we didn't get that, it doesn't mean we can't be topped out. But the way I look at it is, it's got to prove that it's topped out now. We need to see from where we're at. If it is topped out, then where we're at is like a 1-2, 1-2 kind of thing. So we need to see a breakdown below lows, right? I'm thinking in terms of stocks here, right? The indexes. We need to see a breakdown that like really just sinks hard. A lot of volume, large candlesticks, signaling a wave 3 of 3. Okay. Until we get that, I think if you're not entertaining the idea that maybe we have another new all-time high coming, I don't think you're doing it right. I think you're missing some really potentially what's the word I'm looking for here? Potentially things that will potentially really affect your trading, right, on that. And so, again, that's why I give you those, that pullback level that we're looking at on the indexes. If we get a breakout above that, well, that suggests we'll probably get a new all-time high. And so we've looked at a few things. So maybe, right? But I think, again, I 75 basis points is pretty much, baked into the expectations, right? Again, we can go here to the Fedwatch tool here. Excuse me. And after pulling back to around 82%, you see that the market is now 87.5% likelihood that you're getting a 75-point rate hike, right? And that would make sense. So you do like 75 again, then you get 50. This is what I've been talking about, right? 75 this month, potentially 50 in December, and then 25 a couple of times there into the beginning of the year, right? And then you hit the Fed funds target rate there, 4.5%, 5%. Hey, they might raise it to 5%. But then the question becomes that, okay, so will we ever come back down to 2%, or does 4% become the new normal, right? And I think there's arguments either way for that. What I will suggest, if 4 becomes the new normal, I think we've probably got much higher all-time highs coming in. And then I think that, then there's a big, it only sustains for so long and then it goes down. But that could last out, guys. That could extend. It's crazy to say it now, but maybe even a decade or something, right? But again, there's still the other side there. I think there's still that possibility that we kind of hit this deflationary edge, right? We already see that commodities keep dropping, right? Oil and gold and silver and all these things. So we'll have to see what goes. We're at this very, very interesting area right now, and I think it remains interesting into the beginning of next year, even if we get a new all-time high, say in the stock indexes, right, or Bitcoin, further into it. I don't think it necessarily says, oh my gosh, there's this new big run for the next 5 or 10 years. But, we have to see how this kind of plays out here. I think it's a very interesting area we are from the all-time high to where we are right now in terms of everything that's going on here. Again, guys, if you think the price necessarily has to break down and crash, and we have to definitely see lower lows and all these things, because war, because inflation, because whatever, right? You're being very emotionally biased, and you're not understanding that the fundamentals right now, if you look at things that are going right now, yes, we are in war, okay? Or not us, but Ukraine is in war with Russia, right? Which affects things like oil, wheat, stuff like that, right? But just because we are in that right now doesn't mean that has to stay that way. You guys see what I'm saying here? There's the difference. People get hooked on this fundamental, which is, oh, things are this way now, so this definitely has to happen. Well, no, that things are that way until they are no longer. And the problem is most people then don't see the idea that maybe this whole thing with Russia and Ukraine could end, right? Which, again, would change, things like oil and wheat and stuff like that, I talk about wheat because we just had the big pop up there because of Russia and whatnot. But that's all local, right? So I guess what I'm trying to say here, guys, is you have to be careful with your fundamental analysis, because most of the time people go in there and they assume because things are a certain way right now that they must necessarily continue on that way. They can't see the possibility that something else changes, right? And that's where people get kind of hooked up with their with their emotions in there, and they miss the trades, right? So this is why I always teach people that come to me, to just trade the charts, guys. Everything's already in the charts. It's all in learning how to understand and how to read it. And does that mean you're always going to get it right? No. We're human beings. We're still affected by bias, guys. I've been doing this, over 25 years. I still sometimes get bias in there when I'm looking at the charts. It's one of those things. It's emotions, guys. It's what makes us human. But that's where the proper risk management really kind of comes in there, okay? So, yeah, again, coming up tomorrow, the expectation is a 75 basis point rate hike, right? As long as we get that, shouldn't be any craziness going on in the market. If the Fed comes in a little dovish and starts talking about what's coming up with December and kind of maybe hinting toward a 50 basis point hike instead in December, well then markets I could see really kind of rallying off that, these risk markets, right? So yeah, that's what we're kind of looking there. So we have that, and then we have Friday, which is non-farm payroll, right? So our jobs report. For months now, the jobs, the new jobs have been, there've been more jobs created, right? And kind of continuing up, right? But overall, the rate of that growth has been coming down, right? And so, I expect that we'll see that. I'm not even sure we'll hit the number. I can't even remember what the number was at the moment here. But I'm not even sure we'll hit that. I think there's a good chance we may miss as far as unemployment goes. But really, the Fed is really interested, not just in that, but really into the month-over-month average hourly pay. So if you see that holding steady or dropping, that gives the Fed room, right? Room to not continue, hiking rates so strongly. Of course, it would just be 1 month, but when you look at that again, in with the whole everything kind of coming down in terms of jobs and whatnot, and CPI's just been kind of doing this thing, right? Kind of go up and down and up, and potentially a top there. So we'll see how it all goes, right? But that's what I'm kind of seeing coming into this, and then into the end of the year. And the charts, suggested that's definitely a possibility. So we'll see there. Let me kind of check in with you guys. See who's here already. Deadly123, you first one in, man. Good to see you. LXT Bamboo, good to see you guys. Hank's here. Nevlusian, Aramis, Thibaswani, Data, Brian Riley. What's up, man? You like that stream with Scott? I hope you guys did. If you guys missed it, check youtube.com/Scott Melker, and you'll see the recording of today's live stream this morning. We kind of looked at some charts, talked some trading. It was a good time. So hopefully we'll do this maybe more often. Just got to get our schedules in sync, right? What's going on, Data? Good to see you. Frank, what's up, man? Let me see here. Fibaswani says, when it's raining gold, reach for a bucket, not a thimble. That's right? The market leads and the Fed follows, not the reverse. Yeah, exactly. Again, guys, there's something I've said for years now publicly here, it's just the idea. Everybody kind of looks at the Fed and goes, oh, what's the Fed going to do? It's going to cause this or that. But in the grand scheme of things, it's really the Fed reacting to what's already going on, right? I mean, if you guys don't have that understanding after, the last few years here, you remember transitory inflation, all that kind of stuff, right? And then the Fed all of a sudden says, "Well, crap, we're wrong here. We're gonna ramp it up really hard this year, right?" I mean, guys, we hadn't had a 75 basis point rate hike since what was it, 2001 or so, 2000, right around there. I think it was right around there. And we've had them month after month consistently here, right? For what, 4 months now? 5 months, something like that? So, I mean, this is pretty big what they've done, but it's always in hindsight. It's always retrospective. It's always, after the fact, right? It's always reactive to what's going on. So, again, social mood shows itself in the charts, right? If social mood is feeling good, charts go up. People have money. They feel like being risky with it, stick it in the market, right? That then, then you have news events, and news events go on. They say, "Oh, look, it's because of this," but it's already in there, right? Or people aren't feeling so well about things. They kind of pull money out. Businesses slow down their spending, their expansion. They fire people, whatever, because they're concerned about things. Shows up in the charts, right? So, social mood dictates what you kind of see in the charts. So the charts give you this visual representation, right, of what's going on with just market participants in an aggregate, right? And then that leads to action, right? So what goes on with the charts and all here lead government and the Fed and everybody else to do the things they do, right? It's not just the stock charts. I mean, think of it. It's interest rate charts, right? It's yields, bond yield charts, right? It's inverse, what you call it? Inverted yield curve. There we go. Stuff like that, right? It's always there in the charts, and then reaction. But yet it's one of the most difficult thing to get people to really kind of understand. But I'll tell you what, when you're open enough to listening and understanding and entertaining that possibility, man, all of a sudden the whole way you look at everything really changes a lot better. And you start getting in before the moves, guys. You're not always chasing price action after news events, which is where you often get caught, right? So yeah, just some things to think about there. Let me see here. Who else is here? Hey, Mr. Wilkes, what's up, man? Yeah, I think everybody seemed to like it. So good stream there with Scott. Always a good time. Aaron Quinn, what's up, man? Yep, see, Aaron Quinn thought so too. Gold Docker, what's up, man? Been a while since I saw you. Good to see you checking in. Dominic's here. Brian says, any chance of a 100 basis point hike? I don't think so. I mean, anything can happen, but I think that's really, really, really out of the realm of likelihood. Okay? Again, there's a lot going on, with the charts that I show you guys every week here. That makes it really difficult to put 100, especially since, the Fed's looking where it's looking, right? Mid-4s, maybe 5, right? I mean, that happens if we do 75 basis points here in November, that happens pretty quickly, a few months out at 50 and a couple of 25s, right? I mean, look at this. This gets you, a 75 basis point rate hike here gets you 3.75 to 4. 50 next month will get you to 4.25, 4.5. Quarter in January, get you 4.5, 4.75. If you're looking at 5, you got a quarter in February, and all of a sudden you're there, right? And 5, again, remember 5 is just this idea that maybe the Fed will look higher than they're looking at 4.5, right? So I think 100's really kind of, I think you can't say it won't happen because again there are no guarantees, but man, oh man, I think that's really kind of on the side of really unlikely to happen there. Crypto Bull Coins, what's up, man? Would you personally hold open positions or close positions before tomorrow's announcement? Obviously, it depends question, but curious to know your thoughts. Yeah, so somebody asked this on Scott's show this morning, and guys, I'll be honest, I don't trade news events. If I am not already well into a position, I'll usually be out by the time they open. Before those news events happen, right? Volatility usually starts a little bit before them. The reason being because depending on what comes out in those news events, you can get strong volatility locally, right? So you can be in the right direction, but the volatility kicks it, down and snaps you out of your position, right? Before it returns and goes the way that was expected to go. As traders, we like volatility. We like to see price action, price movement. But when I'm teaching traders, usually I advise them to stay away from news events because that volatility is too much volatility in too short a time span. And it's difficult for experienced traders to trade it effectively, much less new traders, right? So, yeah, if I'm in good profit in a position I think is really going to continue in the direction that I'm in it, whether it's long or short, I may hold it through a news event like that. But if that isn't the case, then usually I'll just kind of sit out and wait till it happens. Oftentimes, like the opening of the stock market, the first hour or so kind of gives you the idea of which direction it's going to continue going. So, just as a real general barometer, doesn't mean it happens all the time, but, usually you can kind of figure that out after about an hour after the event happens or so. So, yeah. Mike, what's up, man? You were watching me with Scott on the other video, so turn that off so I can see me in the first. Oh, man. So, yeah, here's where we got here, guys. Let's start off here real quick with the dollar here, right? So the dollar right here, this is the daily, this is the futures chart. Again, I'm really interested in the fact that we had this rally up here and this strong volume that came in on the daily here. Look at that volume. Bigger volume here than you had at the buying climax up here, which itself was already a big bit of volume, right? If you zoom in, there's different ways to read the price action a bit here, but on the daily, it looks like ABC, right? So it looks like potentially, this could be just a WXY, right? You need a breakout above this swing high here at 113.835 on the futures. It's pretty close to the same thing on the actual DXY chart, right? But as long as we're coming back down, another one down. It could also be ABC 1, 2, ABC 3, 4, ABC 5 as a leading diagonal. And so the idea would be that we drop down in 3 here, and then we'd have a 1 and probably a 2 back up toward this kind of area here, right? So we've got the daily pivot here on right around the 111.5 area. High volume node up there around 112. So probably in that area. So you get 1, 2, 3, 4, 5. And then you'd rally up and just this area be 1, 2 and continue down. For right now, nothing is going on here that says this is definitely not the top here, okay? There's a strong possibility of what's going on here that says this could be the top. And again, all we would need is a breakdown below the swing low here. And all of a sudden, we've got 1, 2, 3, 4, and we're on a 5th wave, right? Again, as a leading diagonal. So again, what I keep pointing out to you guys is if the dollar is topped, what exactly is the catalyst that all risk assets drop further, right? There's really nothing there. People are pulling out of the dollar. They pull out a dollar. They usually put it into risk assets. That's just usually how it works, right? You might remember back here, this little fun thing right here, right? So this was March 2020, right? Where everything dropped except for the dollar, which rallied the heck up, right? So everybody got scared, went into the dollar, safe asset, right? And then after that bottom there, everybody started pulling money out of the dollar and putting it back into your risk assets. And so new all-time highs for everything, right, as the dollar fell off. That's what we're seeing up here, right? So maybe, coming off there, we'll see that. I think there's a good chance that it is. Now, if we do happen to break out above the swing high here, I've still got that 120 to 122 area, target area. So we'll see. We'll see. But for right now, it's doing what it can to make a good argument that we may be headed down further off that. And along with that, of course, is, let me see here. Let me find my other chart here. Let's pull up this here real quick for you. Right here. This is something I've talked about before. This is that long bond. Yields appear to be topped out, and it would make sense. They're over there at the monthly R5 pivot, peaked out above it, right? I've been looking at a couple of different ways to count this. It's crazy, but I could actually see if we zoom out here a bit, or zoom in a bit. Let me see here. Let's go to the daily. So if we go into the daily here, it's possible we've got maybe like a, and then B as a triangle, and C. And so it's a W, and then an X, and then an A, B, C as a Y, right? In that case, excuse me, as you can see here, now you've got a strong rally up here. You know, it goes almost to the 1618, so it's iffy, right? But locally, what are we looking at? So we've got this great ascending channel that it's been following on the rally up there since back here in December of last year, right? However, we found support here and we dropped below. Now, on this daily, we are challenging the low over here, right? This low over here was 4.054. This one over here is 4.055, right? So it's challenging this low. It's trying to find support here on the pivot, as well as you can kind of do this ascending kind of support right here. Always moves. Right here, right? So really, if we're dropping down through here impulsively, I mean, you know, you've dropped below the channel EQ, you've dropped below local support, you've dropped below the daily pivot, you've dropped below the ascending support. I mean, that's a cluster of confluence of support that you've dropped below. So if you're doing that, you know, I think probably what happens here is you get this drop down below, break back up, and then continuing down, and then kind of down, boom. Kind of, you know, it just kind of continues down like that, I think. Now, it's possible you could count, like, potentially count 5 waves up from the bottom there. And if you do, let me see here. I think I've got a potential count here. Oh, I thought I did. Do I not have that here? It must have been another chart. Okay. But, you know, if this is 5 waves up here, right? Say maybe 1, 2. I don't know. It becomes kind of difficult here, right? So maybe 1, 2, and then 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 here, right? Maybe something like that. We would generally look for a pullback. This would be 4 here, right? So generally we look for wave 2 to you know, reach wave 4 the lesser degree. You can also say it's 23.6, right? But that pulls us back under this multi-decade resistance. And all of a sudden this just looks like, it just looks like a throwover, right? If we lose that, you know, again, we'll look back here toward, you know, so that's right around 2.864. We can look here at 2.195 and then 1.77 as far as yields go, right, on this. So, you know, I think there's a lot of potential. And that doesn't mean we can't, like, pop out a little bit higher here. And I think, you know, if we saw the dollar pop out to 120, 122, I think we'd see this one just pop up a bit higher. Maybe try to get these upper 4s here and hit this channel resistance. But, you know, again, if we lose this here, we look for support on the ascending channel here. And if we lose that, we'll look for support here. You know, you can look horizontally or diagonally here, right? Around this 3.3 area. If we lose that, well, you know, again, we'd look right here at 2.864, but I think we're probably coming down here toward 1.77, 1.75, 1.70 kind of area. Because this is that area where it's resistance and support right here. So I think there's a good chance we'd get down there. So even if you thought it had to go higher eventually, I think there's a good argument for it coming down here. And so it comes down here because the Fed, you know, again, lays off its huge interest rate hikes, and you know, everything kind of rallies. Money gets sucked out of, you know, this area right here and goes into risk assets, right? Gets sucked out of the dollar and bonds and stuff like that. So again, if you're looking at it, I think there's a lot in the charts that go beyond the simple narrative of, you know, Russia and Ukraine are in war. We've had this huge CPI inflation. The Fed keeps raising it 75 basis point. You know, again, all those things, yeah, as long as they continue on, sure. The likelihood of whatever you're thinking about things going lower is going to, you know, likely happen. The problem is people get so caught up in the idea that that has to happen that they can't wrap their heads around it when it doesn't continue to happen. And that's the problem, right? That's the issue that traders often have. And so they get stuck in their narrative of what they believe must absolutely have to happen. And they miss all the trades they could get with with just being a bit more open-minded on that. I would love to say that comes with time, but for even most traders, it doesn't. There is a complete reset that has to be done in your head to just kind of, become where you're consistently profitable. And it's tough at first. I'm not going to lie. If it was easy, everybody would do it, right? Trading is simple. It's not easy. That's what I always talk about. And it's not easy precisely because of you being your own greatest enemy, okay? Let me see here. Do I have a 4-hour DXY count? Actually, I had this, and then we broke back up above here. So again, I said there's a couple different ways to count this. This lower in here, right? Let me kind of get this to the 4-hour here. But I think, again, again, looking here at the 4-hour, this could be 1, 2, 3, 4, 5. So it gets, again, A, B, 1, 2, 3, 4, 5, right? C comes up, and then A, B, 1, 2, 3, 4, 5 potentially down here, right? So again, the idea is that this could be a 1, 2, 3, 4, and the rally up here maybe potentially targeting this 112.3 area, right around the R1 pivot on the 4-hour. Because I'll be honest, that's a pretty nice looking 4-hour candle there, right? So the idea would be this would be A or W, this would be B or X, and then we'd have Y or C coming on here. But again, the idea being that 1, 2, 3, 4, and then 3 more down get you that leading diagonal. I think overall, the odds right now still remain much more skewed toward the idea that the top is in for the dollar than not. That will change if we were to break out above this swing high right here. This is that same kind of idea that I've been talking about on the indexes, right? On the stock indexes, that if we go above it, it opens up the idea that we're probably going to a new all-time high. Same idea here. Because if we do hit that again, ABC just becomes WXY, 3-wave correction if we break out above there. As long as we are rejected anywhere prior to that and we drop down below this swing low, we still have 1, 2, 3, wherever it is, 4, and a 5th wave. And so 5 waves down means, guess what? We're going to do 3 up and at least 5 more down. So you can at least get a larger ABC, but I think quite likely be 1, 2, 3. So that's how how I continue to look at this at the moment, really. Your Fib model lends to the diagonal, leading diagonal as well. Man, you know what? We need to talk sometime, man. I know you sent me a message there. We'll get it together, man. I'm just so swamped at the moment, but yeah, man, love to chat sometime, zoom it in or something, right? I said zoom it in, man. I'm so old. I'm just crazy. All right. My DXY 1-2 looks like ABFC. Yeah, exactly. Could still be that, but it wouldn't be ABC. Again, I think if we zoom out at 4-hour, it looks like a pretty clean 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5, right? So it'd be ABC, and then 1, 2, 1, 2, 3, 4, 5, right? So ABC again. So it gives us a WXY. But until it breaks out above here, the other side of that is that leading diagonal. And I do continue to think that's more likely the outcome at this time. But like I said, guys, if it pops out above here, again, that suggests that that we've got that leading diagonal going. And in that case, you could, probably bet on lower legacy and lower crypto probably. I think as long as we stay above here, below that area, though, I think it's hard to get lower on those. Now, in terms of crypto, of course, you do have, what is it, something like 75,000 Bitcoin held by miners, which could still see them capitulate lower, right? But if Bitcoin were to be nice and kind of rally up strongly a few $1,000s, that would take the pressure off a lot. So, we'll see how it works for that. I think the miner thing, again, Scott brought up this morning, and I do happen to think that that's probably the biggest threat to Bitcoin price right now. I think outside of that, as long as the dollar doesn't break out higher there, I see no reason for Bitcoin to continue lower. It takes, as long as the dollar's coming down, it takes that sell pressure off, that downside pressure on price off of Bitcoin. So yeah. LXT says dollar shortage still in play. Yeah. I mean, there is that. Something I've talked about for the last few years now. But again, these are things until they aren't anymore, right? And so this is why we have to continue to watch how things play out there, because if something happens which changes that, well then all of a sudden it's not such a thing, right? And if it's not such a thing, well then if you're using that as a reason for why a thing has to happen, well all of a sudden that thing doesn't have to happen, right? Yeah. DV believes the dollar's going higher, no Fed pivot. See, again, everybody's worried about the word pivot and the word pause. What you need to worry about more is, what is the verbiage coming out tomorrow? Is it going to be slightly, even just the slightest bit more dovish? Anything that kind of gives the possibility that we might see a 50 basis point rate hike in December would be extremely bullish for risk assets and very bearish for the dollar. It doesn't have to be pivot. It doesn't have to even be a pause. It just has to be a slowdown, right? That's all it has to be. It's just a slowdown, which is what we've talked about, all this year, right? Coming into the end of the year. So we'll see what happens there. But here's the thing. Even if we hit 75 basis points for December, that is currently what the market is pricing in. No big deal, right? It doesn't matter what the Fed's doing. It matters what the market thinks. That's what it does. Okay, guys? So don't worry about, the words pivot and the word pause and all this other silliness, because everybody's getting hung up on it. I don't think everybody really understands what they mean. All you have to do is look at what's going on tomorrow, and does the Fed sound any bit more dovish toward December? Again, with Daly and Evans coming out like they did, it seems like they might be. If not December, then it'll be January, right? But like I said, even in December, if it's a 75 basis point rate hike, that's no surprise. The market has been pricing that in for months now. It's not doing that causes the volatility. And if they don't do that and do something lower, well then extremely bullish, right? Because they were already expecting that, but now they get a reprieve, right? It's less. So yeah. Okay, that's fine. Yeah, you can disagree on that. That's fine. Like I said, as it comes in, and I noticed that it doesn't show. It doesn't appear that my that the chat is showing up there, is it, guys? I apologize. I'll have to get this figured out. It doesn't look like the over in this area here that the chat's showing up. I just noticed that. He says Goldman calling 75.50, 25.25 at next 4 FOMC meetings. That's not bullish for risk. Sure it is. But it's not. You're missing the point. You're thinking about the fact it's still rising. All you have to think about is, what is the market expecting? And the market's pricing in 75 here and likely 75 in December. So any change to the downside is going to be extremely bullish, because they've already got it priced in 75. Yeah, so that's what I mean there, right? No, any of the comments aren't showing up there. None of the Twitch or YouTube comments are showing up there, so I do apologize, guys. So anyway, so here's what we're kind of looking at. Let's jump over here to Bitcoin real quick, right? So Bitcoin this morning, we were watching this kind of like this inverse parabolic kind of curve thing here, right? And we had popped above it. We were looking forward to see if we could hold here. It didn't. It dropped down below. Okay. Now we're trying to break out above it in the 15-minute pivot. Really what we need to see is a breakout above 25.68 and 74 cents here on Coinbase. If we can get that, that'll set up a target here of a breakout above wave B resistance at 28.3768. And if we can get that, that adds confidence to this 1-2 count. Gives us a minimum expected wave 3 up here at 21.984 1/4, which gets us a minimum expected wave 3 up here at the blue supply structure support there right around 22,400. If we lose wave 2 here, well, then, if we use that support, then that obviously changes things. And we need to see if we can find support here at the daily pivot, which is right here, in the top area of this hourly demand structure here. If we drop below wave 4 here, well, then, okay. We talked about the possibility that maybe then, because this is kind of convoluted, the count here, I can count 5 up, but I can also count an ABC. So if we were to drop toward this wave 4 area down here, whether right below it or right prior to it or right beyond it, I would look at this as likely a wave 4 flat. And, there would be some like 1, 2, maybe 3, 4, 5 here. So ABC or WXY down, back up, and then down. And then that just gives us a wave circle 5 target up here at 21,670. So that's just kind of watching, do we get the breakout higher here? Good, we can be long. Do we get the breakdown lower here? We want to see it find support in this area. If it continues coming on down here into wave 1, wave circle 1 at 19,698.10, then that's going to invalidate that count up there. So that's it's simply how I'm looking. It's as simple as that. Right now, big picture is we're finding support on the hourly pivot. In here on the 1 hour, we're crossing bullishly down here, attempting to an oversold at Stoke RSI, right? 4 hour, we've broken out of oversold, kind of pulled back. Can we curl it back up here? We've dipped down right into this 4 hour demand structure, this wick down here. Again, right in the pivot area. Daily, bigger picture is, guys, counts and everything else aside, all we've done is moving sideways between the pivot and the R1 on the daily. As long as that pivot area holds, there's no reason not to be bullish. If you get some impulsive breakdown through here where you start getting down here around, 19.3 or something, then you can lean toward the idea that maybe this is just corrective and we're heading down lower. But again, that's just the idea that, okay, maybe this is 3, this is 4, and this is 1, 2, 3, 4, and we get a 5 on a dip down below here, maybe down to 16.5, right? As an ending diagonal. Or in terms of this range, as a spring below the range, right? And right back up. Also, if we wick down below this June low here and then close back up above it, that's what we call a bullish SFP, swing failure pattern here. And usually when you do that, price rallies to the top of the range. So, even if it does break down, that's what we're looking at, right? Now, the other, again, I keep you guys up here. The other potential bearish thing going on here could be this is just a large triangle, right? Again, instead of this being 5 and done here, this is 3, or C and done here, this is wave 3, right? And this is A, this is B, and you'll get C, D, E. So you got a triangle forming, and then a thrust out of that triangle. But again, even that, my first thought is we're just going to get a breakdown below this point here. You guys want to know why? Because I know many of y'all are very, very bearish, and that's exactly why. Because you're not alone. A lot of the market is extremely bearish. They're biding their time. They've been waiting for almost 5 months now, 4.5 months, for this thing to break down below. They're bound and determined to short the heck out of it if it gets in this area. It's the perfect setup. You trap them. You drop right down, hit that liquidity, pop back up. All of a sudden, you trapped all your breakout traders, and they immediately have to go long and cover their shorts, which gives you that pump and rally, which gives you that strong rally that you guys like to say, oh, the bottom's in now, right? So, yeah, there's that possibility. And so why would that be possible? Here's the thing, guys. This is almost 16.9.5 here, right, at the S2 pivot on the daily. We're right into this right here, guys. Right into this demand right here. We're popping right into this demand. So maybe it doesn't even go to 16.5, which it could. That's sort of lower end here, the resistance support here. But, man, that $500 range, that's the perfect liquidity right there to send that thing right back up. So you dump hard, wick down, right back up, close back up, whether it's daily or weekly. But you've got, basically a 4-month lag between the swing low and that new swing low. It'd be a proper bullish SFP. But, again, for right now, while we're above this daily pivot area, I think you should be leaning more bullish. Break down below that impulsively, and then you start looking, okay, maybe we can look further down. So just framework, right, guys? Just the framework of how to kind of look at the situation and kind of figure out what may or may not, be going on there and what you may or may not want to do with it, right? Let me see here. Kimozabi, what's up? He says, well, the current rally did start when one of the Fed officials released that dovish statement, so market may be pricing in dovishness, so maybe a small pullback on the minutes tomorrow. Yeah, possible. But realistically, guys, I think, whatever the price does, it's already here in the charts. It's just, can we read it properly, right? Again, I floated the idea with, with our members that maybe this is an Adam and Eve kind of double top, right? But guess what? Until you get an impulsive breakdown below this swing low between them, this is 20,000 here on Coinbase. Until you get an impulsive breakdown below that, this is not a double top. This is a potential double top, right? Because until you break down below here, price could rally up and break out higher, and all of a sudden that's not a double top, okay? I think with traders, you have to be much more vigilant in the way that you that you read that price action, right? The way that you call patterns. Most people, most traders out there, in crypto Twitter and social media, they try to make patterns before they actually are patterns, right? So again, potential double top, not confirmed until you get impulsive breakdown below this swing low here. But here's the thing about patterns, right? Just because you break down below here doesn't mean this is going to play out. You could break down below it, say come down here to the S1, and rally right back up, right? So, again, there should just be varying levels of likelihood that you're becoming increasingly more correct or increasingly less correct. It's not that you're wrong or that you're right. I think when you keep thinking in terms of those guarantees, those definitives, that's where you lose money in trading. Don't be so, I'm either right or I'm wrong. You're varying levels, increasingly or decreasingly correct or incorrect. And that's, as price moves through validation or invalidation levels, right? And if you trade accordingly, with that in mind, proper risk management, it's hard to lose more than you're winning, right? Most of the time. So yeah. Let me see here. There's a nice tree in my backyard. Yeah, we got a few of them over here, right? DB says the market is split 50-50 between 50 and 75 this meeting, so it's not priced in, except it's not. Right? 12.5% of the market believe that it's a 50-point basis rate point hike, right? 87.5% believe a 75 basis point rate hike is coming in. So, I mean, it's not 50-50. I mean, I'm showing you right here. These are the traders' bets. These are futures based on that, right? So, yeah, so it's not 50-50. It's 12.5% think maybe a 50, 87.5% think a 75 going to be mentioned tomorrow. That they're gonna mention tomorrow that they're gonna do. So yeah. So after that verbiage tomorrow, then we'll see what does the market think about December. And that's the real interest here. I think that's the real interest. So yeah, like I said, I don't think there's really much reason at all to think we're gonna hit a 50 tomorrow. No. I think, 75 is where we're at. So but December comes up, and is December 50 or 75? We'll see what the market thinks then. After all the comments, and the market can kind of swish it around a little bit and kind of, in their head and figure out what they think, right? Let me see here. Okay, so there we are with all that, right? So again, we need a breakout above 25.68.74 here on Coinbase. That'll set up the breakout here above wave B at 28.37.68. And if we can get that, that'll then set up that wave 3 target, 21.984.25 minimum expected, right? If we do break down further toward this wave 4 low here, right around 20,000, I'll lean toward the idea this is a flat. Like I said, 1, 2, 3, 4, 5 maybe. coming down to this area. But if we're really kind of getting down here, you know, to that S1, you know, into wave 1 here, you know, again, that wave 1 is where I kind of look to invalidate the count there at 19,698.10. So yeah. Baltazar says not so long ago there was always a 100 basis point on the table, so things are improving. Yeah, you know, and that was the goal. You know, again, I believe with Daly and Edwards there, Evans, not Edwards, Evans, with their comments over the past month and a half or so, to get the market again to start anticipating maybe that the Fed will start slowing down instead of the Fed just coming out all of a sudden go surprise 50, you know, and everybody's like what. You know, because that will be a very strong effect on the market, you know, if they're not expecting it. And cause craziness in the market. And, you know, the Fed tries not to do that, right? Yeah. Flat or expanded flat here? It'd just be a flat is what I'm looking at. A flat, you know, your wave B can go up to about, 105, 108% of wave A. You know, your wave B. So, you know, it just has to get at least 90% of wave A, and it can go up to about 105, 108%. Usually that's the range we call for a flat. We'll have it, and then then we would expect wave C to come down in 5 waves, just prior to or just beyond wave 4 there. If we're doing expanded flat, we're looking closer to like 123.6, 161.8 on that extension, and then that gets that much bigger move down below wave A on that. Legal question: how does the oil windfall profits tax not violate the equal protection clause? Oh man, I am not even going in that. Oh man, so here's the one thing I learned in law school, guys. Things that seem obvious when it comes to law usually aren't. And so, the thing is, even though the magic black robes are supposed to make the judges, neutral, the reality of it is they're human beings and they're, driven by emotion and bias as well, which is why you need more than one of them, right? But even then, depending on whose office is going to try and push somebody, who's in office is going to try to put somebody more toward their thinking. Somebody's got more of a bias on their side than not, right? It's all a big game. But yeah, so, often the way that things seem when it comes to law, like we might read it as lay people, right? We might read and go, man, that seems to say this, right? And the reality of it is when you go in there, because of how law is done, it doesn't actually say this, right? A lot of people go in and say, oh, man, you know what? It's killing people is against the law, right? Well, is it really? I mean, and is it this, it depends on the circumstances, right? Heat of passion, defense, premeditated, not premeditated. I mean, so all these things have differing levels of sentencing or maybe even not being found guilty at all. So even things that people generally take as, this is definitely the way it is, usually not quite so much, right? Now, what can I say that I do like about this range here, guys? Because remember, this is just a range, right? Let's see here. This is just a range. And so if we look at this, what do I like? I like that through this range, volume's dropping off. It's picked up right here. So it's the drop down below this swing low here, right? And then that swing low. So you notice right here at the very low where it prints the doji, it's even greater volume than this big, huge candle down, right? Demand showing up. Here we come again. Where does the volume come in? Even greater here at the bottom. So when you're watching this and you go, man, look at this huge spike of volume down here at the bottom, okay? It follows up, tries to go down again, even greater volume here. Man, it's showing that demand is showing up more and more and printing higher lows. So, default is that you should assume it's probably going to go up higher, unless it shows you that it doesn't. It could still go down lower, but based on you're kind of looking higher there, right? Entire range, volume dropping off until the lows. So, I mean, this seems to suggest there's a good chance this is reaccumulation here before rallying back up higher, which would be in line with the count is what it is there, right? So, yeah. Let's see here. Let me kind of catch up with you guys here. Eric Quinn says, market participants are so traumatized by the chop and length of accumulation, they struggle to envision that the market can get better. Not only that, people search for content that they want to believe, whether it's bearish or bullish content. Sound bites feed the narrative. Yeah. And there's nothing, absolutely nothing as a personal attack on what Eric Quinn said there. Again, I say these things often. Never me, guys, listen. I appreciate DB coming on here and having a different opinion. That's fine. I have nothing, there's nothing wrong with that. I explain my view and why I look at it that way, right? I explain my experience and what usually happens to these different things, right? Now, again, does that mean I'm going to be right? No, not at all. Nothing guarantees that I'm going to be right or be wrong, right? But you have to have something, you have to have a place to begin, right? If you're trading, you have to have a place to start and a narrative to listen to. But within that narrative, you have to have invalidation and validation levels. And I mean with charts, right? Because again, with fundamental analysis, with things like, with arguments like, oh, well, there's war. Oh, well, CPI has continued to remain high. You're sticky, right? Inflation, right? Oh, well, the Fed continues to raise 75 basis points, right? Well, yeah, these are things that are happening currently. But none of that says it has to continue tomorrow. And I think that's the part that a lot of traders really have difficulty understanding and getting through. But me saying that, of course, doesn't mean that DB's wrong. That the Fed won't continue to hike rates into next year, right? But it's just a realization of how we tend to interpret things, how we tend to look at things, and how the way that we're doing that affects our emotional biases, or how our emotional biases affect those things, so that we continue to hold to them even when the idea maybe that something's different. Which is, again, why I teach people that come through me, I teach them to not really worry about that so much as to pay attention to the charts. We talk about macro stuff, global finance stuff like that in Texas West Capital, but never on the point that should be why you're trading. I try to give context to what may be going on with the charts. But it's not the other way. It's never, oh, this is going to lead to the charts. It's always the chart leads. So, but again, that's something that I can't convince everybody about, right? So I put it out there and I try to explain why, and hopefully people are open enough to listen and understand and then see it. But, everybody's their own person. It is what it is. Okay? Recency bias, yes. Teflon to control, among other biases. Yeah. Okay, so let's kind of jump on here, guys. Let's take a look at oil. All right. Where are we at with oil here? So again, still looking for this rally up higher. If this count is correct, wave 3 has a minimum expected target of 96.85. If, however, we get rejected here at around 92.68, that'll suggest that maybe we've got a 1, 2, 3, 4, and then we'll get a 5 out of that. Parentheses 3 right here. So in either case, looking for it to really kind of overall continue higher. As with everything else, guys, I mean, here's the daily, right? And so for all intents and purposes, we pulled back to the daily pivot. We found support, right? We closed down below it. Today, we closed right back up, bullish engulfing candle in progress at the moment. We wicked down to the previous area of resistance, right? Support resistance all through here. We found support there. Now we're heading up. So bias, as long as we close like this or better, especially, it should be to the upside. For right now, I still think, at least the way we're looking at the moment here, that we do have a top in. And so I've got this as a 1, 2, 1, 2 potentially. It's also possible this is an A, B, and this is 1, 2 of C. But if that tops in, I think we should be seeing prices heading down into the 40s, at least, as we do this. Remember, we had this rally up here. Remember, this has been a rally up from that negative 40 or so low back for the the May contracts of 2020, I think. So this is 2.5 years. Up here about 2 years of rally before we're finally starting to get some decent kind of pullback. Things don't head up, in a straight line consistently, right? So, I think pressure is still overall to the downside, but with some, potentially a WXY printing out here toward this $100 level. And $100 psychological as well, so not just the EQ of this daily purple supply structure there, right? So we're kind of looking there. Let me see here. So, let's see here. So that's oil. Let me see here. We can look right here at the NASDAQ Composite. So remember, this is the one that topped out in November of last year. So it's been almost a year that top's been in, right? Way up there. And so locally here, this morning we kind of gapped up here, right? Big gap up to a new high and then got rejected right around that daily pivot. And we've fallen back down, right? So right now, it looks like maybe we got a 1-2 as a running flat here. And then a 1-2. And then of wave circle 3 here, we've got a 1-2 expanded flat kind of happening here. Again, as you can see, there's that gap up at the open there, right up into that daily pivot. And we're kind of pulling on back there. So maybe like a 1, 2, 3, 4, 5 kind of thing here. Though, we're not really getting a lot of movement here on RSI. We're not getting that push down lower. So we want to kind of be careful here. But if we can rally up and break out above this swing high, right above the 15-minute pivot, 1093.73. If we can get an impulsive breakout above that, I think that should send us up higher there as we're looking. But, when I was talking on the dollar there, I said, the same thing on that breaking out higher, maybe an all-time high, right? That's this area right here. That's this, right? So the idea being maybe we've got an A and a B and a C here, right? So I've got this as an ABC, but you can also get 5 waves out of this, okay? And so, and this count is off here, obviously. Old count. Haven't looked at the daily on here in a while. But, again, the idea that maybe, just maybe, we've got a really short kind of, what do you call it there? Short wave B, wave C, right? So what you need is you need to break out here above this 13,181.09. If you need to break out above that, then it looks like 3 waves down. And you should be long bias at that point. Doesn't mean it definitely is going to go and break out higher, but that's that first real move you're looking for to say, okay, if I'm not biased to the long side down here yet, that's at which point you should probably start becoming more biased toward that. At the end of the day here, again, we remain above the daily pivot. Moving in sideways here between the pivot and the R1. So you can see we rallied up into this previous area of support resistance right here. So from a daily picture, if we can break out above that impulsively, well, I mean, that sets the stage for higher up, right? While you remain above that daily pivot area here, I think you should be maybe further long bias, right? So we'll see how that plays out. But again, for the daily or whatever, this is your major area. That's where you look for the breakout above. And it's the same thing, whether you're looking here or you're looking at, say, the, what is it there? The Dow, right? Now, the Dow has had a stronger movement up overall than the E-Minis or NASDAQ right there, right? So let me throw on the Dow Futures here, I guess. Here we go. E-Mini Futures here, right? So again, the idea that we had this as a 3 and then A, B, C, D, E as an expanding megaphone pattern, right? Expanding symmetrical triangle. It's kind of a rare pattern, but that gives us a wave 4. And the idea was that this is wave 5, but again, it just rolled over. There was no explosive kind of, top, right? One would argue this was a more explosive top, right? Look at this rally up into that before it dropped. So, you know, it's quite possible that, you know, if you jump in here, maybe you've got a 1, 2, 3, 4, 5 still, or even a 1, 2, 3, 4, 5 to finish out 5, right? I mean, if this was to be like a 1, 2, 3, 4 here, then you should be looking at, you know, again, if you get that breakout, you should be looking up here around 42,950 or so on the Dow. Based on the height, if this again is a, you know, A, B, C here as 4 or something. You know, if you're zooming out to the weekly here, let me see here. I mean, you know, I look right here and it looks like, you know, potentially ABC and ABC, right? So even though it's a pretty deep drop there, maybe one with A, B, and you get C as a 2, right? Flat, some expanded flat here. But man, that you would probably have to see it coming all the way up here around 35.4, 35.5, probably to get to that, if that's the case. So you want to watch that, right? Now, let me see here. What was I going to look at? But there, you know, that's the weekly there. We can zoom in here a little bit more. And all of a sudden the 3-day goes, well, 1, 2, 3, 4, 5, right? So again, you just want to be careful with it. Your big thing is that kind of 34,250 almost area. That swing high. That's what you're looking to break out above. You can watch descending resistance, right? So a first real clue that we may break out above this one would be a breakout above that descending resistance, right? At the end of the day, you know, effectively looking at a wedge, right? Though you probably want to do something more like this here. Now you've got the proper, you know, support, resistance, support, resistance, pulls back, drops just below, rallies back up, right? Again, double bottom right here. Break out above there, rally back up, continued up higher. On this move down, you know, we've broken out, peaked out here above this interior swing high there, so that was important. But on the pullback here, you want to see it remaining there above that daily and heading up higher. That's what you really want to see. So yeah, we'll see how it continues to play out there. But, you know, again, everybody's been hating this rally coming up here, right? I think people loved. It seems like the sentiment different here. People really enjoyed this rally, right? Here they're definitely biased to the downside and they're hating this. So again, we'll see how it plays out overall. But you know, watch that daily pivot area. If that thing can hold its support, I mean, I would be looking at potential breakout of swing high and then that interior swing high there. If we can get that, well, I think the odds increase significantly that we might just take out the all-time high and head up higher on that. Does that make sense? But again, you know, if the dollar's going down, less downward pressure on everything, right? On risk assets. So, you know, if you need a narrative, your narrative would be that the dollar topped, if you need one. Otherwise, you just look at the charts and go, well, charts are suggesting maybe it's topped. And you can get your narrative off that, right? But, you know, again, guys, it's much more difficult to create a narrative and try to fit it onto the chart than it is to look at the chart and create a narrative off that. But even doing that, you know, it's going to take practice, guys. You're not going to become expert traders overnight. 6 months? Nah. A year? Nah. It still take you. Wow, guys. It takes a while to get a feel for markets and to understand. And I think the biggest part with that is really just letting go of the things that you think they are. The things that you think must absolutely happen. All the misconceptions that you have about markets and what's going on there. I think you have to really get beyond that. And that's why it takes a long time to really become successful as a trader. because that is so difficult to get over. Again, trading's simple. It's not easy, right? The difficult part is everything's going on in your head. That's the difficult part. You know, a lot of times people come in, they're like, oh, you know, in stock markets, oh, it's Wall Street, or in crypto, oh, it's whales that are stealing my money and keeping me from being successful. No, it's you. You are your biggest worst. You know, you are your biggest, most crazy worst enemy you have as a trader. You really are. And until you accept that and understand that, trading is going to be exceptionally difficult. You have to understand the significant part that your emotions and your inability to listen and to accept something that you may not hold as truth, you know, maybe is correct. Trust me, I'm telling you from experience, guys. The same thing I went through when I first started. It's tough. It's tough. So there we go. Man, I think that, you know, guys, I think that maybe does it. You know what? Let me pull up a chart here. Let me pull up gold here real quick. So gold and silver are interesting. Gold looks like it wants to continue higher, right? So if we look here, we can go 1, 2, 3, 4, 5, right? Gold looks like it wants to continue higher. If wave 2 is complete here around 61.8 on the retracement, wave 3 is going to have minimum expected target of 16.88.10, right? But here's the thing. So, I mean, this looks pretty good and bullish off here, right? But if we look at silver, it doesn't quite look the same, right? Silver looks a bit different. We've got 3 down here and 3 up, so I assume that this is a running flat kind of thing here, or maybe a flat. Either way, we got come here, and then here we've got 1, 2, 3, 4, and so as long as this holds, this support at the daily pivot, we should have this target up here of 20.385, which, as you can see, I have that as you know, a 1, A, B, C as a 2, right? Suggesting further downside. So, you know, you've got gold and oil not really looking overly convincing here, but there's also the possibility that this here could be a triangle, right? But if this is a triangle, then this can't be a 1 over here, right? So it would have to be the idea that maybe we got like a 1, 2, 3, A, B. Nope, that can't be C. See, this is where it gets kind of difficult. You know, maybe a 1, 2, and this would have to be a 3 here, and this would have to be A, B, C, get a D and an E as a triangle before it dips down further. So, you know, when we're looking at that, there's still some possibilities because there is all this sideways, right? There is all this sideways. And so, you know, that makes it a bit more difficult to figure out, okay, maybe what's going on there. So, I mean, you have to look at this as a range and go, okay, well, I'm just going to trade smaller time frames within that range. Wait for the breakdown and breakout to really kind of decide, okay, am I getting a longer base position? If you're trying to take a long or a short, looking for way down here or way up here, mid-range, this is your range right here. Mid-range. That's silly. You don't take a long or, you know, a larger time frame, you know, long or short from the mid-range. You know, and it's been ranging here for, again, 4 months, right? Almost 5 months. But traders tend to get very frustrated, and they fear they're going to miss out, and they get bored, and they trade, and that kind of gets them into trouble. You can do short-term trades, guys. We teach a lot of ways to get into trends and how to identify trends and changes and stuff like that in Tier 3. So anybody that's in there has a ton of opportunity, you know, a ton of videos in there, education and live streams that we do teaching you all that stuff. So you shouldn't be fearful that, you know, you're going to miss out. Trade your smaller time frames if you're range bound until you're breaking out and you develop a trend on the longer time frame. Going there. Grand scheme of things, I mean, look at that. I remember calling this, up here and saying we're going to head lower here and, back over here in 20 and 21, and everybody giving me a hard time about it. And I tried to be very disrespectful in these areas. Look, it's going up. And then what has it done? I mean, it's continued to go down here, right? From $22 or so down to, 17.5. 20% drop on that, right? But, right now we're going sideways right here on this previous area of support, right? On that high volume node. If we lose that, things become more interesting. Again, look here, and then we could really kind of look lower, right? But we'll see what happens here. Can we get that rally up? Maybe I'm wrong about it heading down here, right? It's possible. I've talked about it. I've given you guys alternate scenarios, right? And I'm watching them. But so far, it's maybe good money, right? And so, again, got that. We'll see. We rejected here a couple of times. See if we can continue going further there. Daily not looking too good there, but where are we at? Weekly? Yeah. But see, if you think about narratives and you go, oh, well, if PMs are going to continue to go lower, then the dollar has to continue to go higher, right? Well, does it? Everybody thought there was a different relationship between bonds and then the dollar, in the up through the 90s there, and pretty much here in the 2000s, it's not been the same. It's been the opposite, the relationship, right? So again, maybe there's something else at work, maybe some bigger top forming in the grand scheme of things, where we see the way that that things were generally happening no longer happening, right? Where we're at this huge influx of credit, right? This huge kind of top or nearing the top of this credit bubble, right? Who's to say that things aren't going to change, from what we thought? Again, as I pointed out, there was this whole different understanding of the way that bonds and dollars work together, or, unemployment and the economy, right? And what's going on with all that. All these things have been changed over the last 20 some odd years. So don't get so held up on what you think. I mean, because it sounds good, right? A lot of things that people are saying out there, especially your big pundits and whatever, a lot of them have good degrees and everything, and they things they say sound right. They sound like they make sense. But if you get stuck on that, then it makes it hard to pivot for yourself right? For yourself to understand that something else may be happening potentially. And then you get caught on the wrong side of a trade, and then you blame everybody else but yourself, and and the rest of it just kind of shrug, right? I mean, what can we do, right? Genghis, what's up, man? So recommend finding a mentor helped me immensely. Yeah. Again, guys, I've still got my own mentors as well in different areas of business and whatnot that I pay a lot of money to. But, mentorship is a great thing, guys. Mentorship, coaching, great things, which is why we're going to actually offer that pretty soon here. If you guys are interested in some kind of coaching or whatever, just send me a DM. You can go to Twitter there, click on the Discord link and send a DM through there. Or sometimes it works on Twitter. Sometimes the DMs don't work on Twitter. On Twitter, you can send it there. Send me an email at christopher.inks@texaswestcapital.com if you're potentially interested in hearing something about that as we get ready to launch that. But yeah, I mean, I'm a big proponent of it, guys. Whether it's me or somebody else or whatever, I think, it's a great thing to do. You're going to end up losing a lot less money if it's done correctly over time than you will trying to do it without it. But, again, guys, a lot of people think, oh, I can get in there and I can trade, and so voila, I don't need a mentor. Well, really? Because at the end of the day, your elite athletes, your elite musicians, stuff like that, I mean, they've all got coaches and mentors and stuff. So just something to think about there. I think it's a great thing you said there, Genghis, for sure. Yeah. Like I said, even I'm pretty successful in the things I do, and I still have mentors and coaches as well. I just think that, man, in my life, I've just noticed that if I want to get to where I want to get faster and with less mistakes along the way, which means less money and less wasted time, that's the way to go. It's always, come out much better that way. So anyway, we do appear to be rallying up here. I wouldn't be surprised if that bottom's there. In Bitcoin, look for those rallies up higher. As always, guys, you know, the only thing you control in the market is how much you lose. That's it. That's it. Okay? So if risk management is not the thing that you practice most, it needs to be. This is your wake-up call. It needs to be. All right? Because you will never be so good that you won't make a wrong decision. Or you won't be early or you won't be late to a trade and then potentially bias or emotion take over. Okay? I'm telling you, that's the way it is. So either you can believe me or not. If you don't, again, odds are significantly increased that you're going to lose more money than you'll ever make. It's all about risk management, guys, okay? Hasta la vista, Barbie. Hello, good to see you checking in. Man, I hope you guys have an amazing week. Y'all trade safe out there. Again, as I said, you're going to start seeing me popping up on a lot of probably your favorite crypto shows and whatnot as we make a real push to kind of do things that I haven't done, you know, since we launched, right? I haven't really been out there marketing and doing stuff. And so hired some people in. So we'll do it. We'll see, okay? I appreciate you, Chemo. Thank you so much. Ben Lee, hey, I appreciate you checking in. Thank you so much. Man, guys, I hope you guys really, seriously, I just hope you guys have an amazing week. The only other thing I can tell you other than risk management, guys, is don't enter a trade just because there's a chance, okay? Look for the higher confidence trade setups. Look for the ones, you know, where you've got more things, more confluence of factors that make it more likely to be what you think is happening. It means you're going to trade less, but it also means you're going to take a lot less poor trades, okay? So that's the other side of that, that risk management thing. I appreciate you too, Chemo, Bamboo, all you guys. You have a great week, and I will see y'all, gosh, I guess on Friday, right? 11 a.m. Central Standard Time. Phil Boswani, take care.